Yields back. The gentlewoman from Texas, Ms. Garcia, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to all our witnesses here today. Ms. Spotzer, I wanted to start with you. First, let me just say that I grew up in rural South Texas on a farm. So when we went into town, whether it was just to go say hello to my uncle or to do business, we always worked with community banks. Obviously, there was only 2. Now I represent Houston, where we have 33, and a lot of what you all would call big banks. But my heart is still up with community banks because they always had the little lollipops at the cashier desk for you to get. So as a child, I enjoyed that. But banks have just changed a lot, haven't they? Since the pandemic, the big banks are heavily embracing technology to make their service available to more customers. However, the community banks we have relied on for years are facing several cybersecurity risks and technology challenges as they compete with mega banks and big tech firms. And in turn, communities they represent are sometimes left behind. One of these challenges is providing services in languages other than English. According to data from the U.S. Census Bureau, over 20% of U.S. households speak a language other than English. What can we do to ensure that community banks can serve limited English proficiency individuals just as well as any other customer that walks in the door?
Well, one of the things that we can do is, one, as regulators, when we have disclosures and those sorts of things, we can make sure that they are provided in languages other than English. So that can actually assist and help facilitate the banking institutions to be able to use those forms. But another thing that we can do is we can continue to invest in our minority depository institutions that are, in fact, often the institutions that are located in those communities and providing services. And I think that, in particular, is one of the best approaches that we can have to addressing that concern.
Well, I want to talk about a recent report from CDFIs, which states that women and employees of color still fall behind white men in being represented in several key jobs, including only 27% of economists were people of color and only 34% of their examiners were women. I know we have at least one former examiner here in the room. It's kind of nice to hear that Mr. Hill gets nervous still. Do you think President Trump's recent actions to fire Director Chopra from the CFPB, imposing government-wide hiring freeze and nonsense attacks on diversity, equity, and inclusion initiatives will aggravate the challenges at CDFIs as well as other agencies?
I think it will. I mean, I think we are looking at the reality that 8 out of 10 net new households created in the United States are households of color. And given that that's the reality, it is imperative that we make progress in serving communities of color and customers of color. So increasing diversity, recognizing it as an advantage rather than a challenge or something to be looked down upon should be a critical priority.
Thank you. Now I want to focus on the outrageous overdraft fees that large banks charge to users. More than a third of working class people earning less than $65,000 a year pay overdraft fees each year. This isn't once or twice. Many of them pay hundreds of dollars in overdraft fees and risk losing their bank accounts if they cannot afford those costs. The CFPB recently issued a rule that would cap the overdraft fees to $5 to help protect the hard-earned money of working class consumers. My colleagues on the other side of the aisle recently issued a Congressional Review Act, CRA resolution, that would rescind the CFPB rule. So how would reversing the CFPB overdraft rule harm working class people?
Well, for all the reasons that we've talked about during this hearing, now is a time where people are experiencing significant financial challenges. One of the things that we have to talk about when we talk about overdraft is a series of regulations that have taken place. It's not just that consumers are paying $35 right now for an overdraft of $2. But it's also that it was true that financial institutions had the ability to kind of pick and choose how they would allow transactions to hit in order to amplify the amount of money that was being charged. And that is why it got the reputation of being a junk fee. So if we repeal this regulation, which, by the way, does not apply to community financial institutions, which is one of the reasons why it's interesting that it's being considered in correlation with this hearing. But if we repeal this, then we're looking at the reality that consumers will continue to
Gentlewoman's
pay.
time's expired.
So it just applies to large institutions. Thank you. I yield
Gentleman's
back.